So why don't you take that?
All right, so actually it's pretty much the end of the earnings season.
Yeah.
So we have EPACK Durables today. It's doing very well. You know, the stock is up around 9%. It is still, however, lower than its issue price, by the way, which was around 230 rupees. So we have the management joining us. It was, quite a flat showing if you look at it on a year-over-year basis for the revenue. But what really stands out to me in this quarter's numbers is that the margin has seen a big improvement. So it's coming at around 8.5%. We have Ajay DD Singhania joining us. He's MD and CEO of EPACK Durables. Mr. Singhania, thanks a lot for joining us. This is Pavitra. So I want to begin by asking you about the margins that I just mentioned, because there's been quite a jump, right, to 8.5%. I think even the industry operates at around 7-8%. So A, tell us what really led to this kind of jump, because I mean, even if I look at last quarter, you were just around 4%, right? 4.5%. And do you think you can sustain at this kind of level?
Yeah, see, first of all, good afternoon and thank you for letting me in. So definitely, the results are good for the quarter 3 FY24. So like we have been saying all through that over last 9 months, we have really worked hard to come to this level. So compared to last quarter, there have been a lot of good factors which has helped the industry and as a whole. Some things which really went good our way is one, that the backward integration into which we invested in last year. So this really seems to be paying off now, and we are able to actually utilize most of the assets which have now been productionized over the last 9 months. So that really led to jump in the incremental metal margin, and that led to jump in the in-house value addition. So that's one significant factor which has helped us. And another thing is last year, if we are comparing it to the last year's similar quarter, we were carrying a lot of inventories. The high price inventories, which was really letting us down. So this year, because the season has been good, the Q2 was good for the industry, Q3 has been good. So this has really helped us to utilize the real-time commodities. And since the commodities are gradually falling month after month, so now we are really well balanced on the inventory side, and we are able to utilize the real-time inventories. So these two are significant factors which are really helping us improve our margins.
Okay, got that. So do you think you're going to sustain at this 8.5 level on that?
Yeah, see, definitely the effort is to sustain and to improve going forward. So Q4, as you all know, for the AC industry especially, is the most heaviest quarter, wherein almost 40-45% of the manufacturing and sales happen. So we are really betting high on the quarter 4 business, and we are very confident that we will be able to beat our performance previous year and show good results to the market.
Okay. Okay, another thing I want to ask you is the fact that you've brought down your working capital days quite significantly. So it was around 90 days in FY23, and now it's come down to around 51 days. How did you manage to do that? And, what were the sort of strategies that you put in play here?
Yeah, so see, we have been working all the 3 levers to improve the working capital here. Significantly, we've been able to reduce the debtor days, so which has really helped us. And at the same time, we are also working on inventory and the creditor days, but debtor days is something which has really helped us to improve our working capital.
No, absolutely, I got that. Could you, hi Ajay, good to have you with us here, Prashant this side. Could you tell us what has been the response to sort of new product categories like air coolers? What's been the response?
Yeah. So cooler is something we started in this current quarter. So January is when we started the production. So cooler is one market which is kind of better penetrated than the air conditioning market. So cooler in itself, I mean, the organized market of the cooler itself is like at 17% penetration compared to 8% for air conditioning. So it's a huge market for the branded players. And for us as an OEM manufacturer, this is a starting point. We've started productions in January with one large customer, and going forward, we are looking at adding newer customers, the newer giants in the industry. And we will look forward to grow significantly in this segment as well.
Although when we speak with AC companies, they tell us that some of the largest sales for them, air conditioner sales, are coming from tier 2, tier 3, smaller town cities. That's where a lot of the demand is coming from, right? But I guess, it's everything in India is such a big market, just in terms of sheer unit volumes, that there's depth everywhere.
Yeah. So cooler in itself is double the size of the AC market. So that's very interesting. And we're talking about the organized market. We all know that there's a parallel unorganized market for the low-end coolers as well. But the organized market in itself is like 17-18% penetration, which is almost double of the AC industry.
Now, could you, Ajay, leave us with some markers for FY25? What are you aiming for within the company in terms of growth numbers, is there room to expand margins? Just give us some sense.
So definitely. So a couple of things the company is working on currently. One is definitely to utilize our assets, to utilize our assets better. We are working on the parallel appliances like coolers, which what was definitely already started. Then going forward, other appliances, both in the small domestic category and the larger appliances like washing machines and all, is our team is working on very actively. And we are also working on a lot of seasonal winter season appliances like oil fired heaters and all. So that segment is what we are really working on to balance our seasonality with AC. And at the same time, in terms of capacity, we have recently enhanced our capacity by almost 50% with the South facility in Sri City getting operationalized in December end. So now we have 50% more ammunition to fire. So with earlier capacity of almost 2.4 million, today we are at 3.6 million. So that's 50% additional capacity for us to utilize during the peak AC season. So, I mean, the current quarter being the heaviest quarter, the Q4, we definitely believe that with this additional capacity, we should be able to deliver better numbers as compared to the last year Q4.
Yeah, you're not putting a number though.
See, a number
for 25, it will come.
Would be difficult because, as we all know, the industry is going through a lot of transitions with newer capacities coming up, even with the brand customers. So for now, next 3-4 quarters, we will actually want to go along with the flow and understand the customer's behavior and then align our strategies accordingly. So in terms of our manufacturing capabilities, we are geared to meet the complete CBU business requirement as well as the component requirement, depending on the customer's overall strategy. So we will be aligning our strategy along with the customers.
All right, we'll leave it there. Ajay, good luck. Thank you very much for joining us here on CNBC TV18. We'll take a break here, put the focus on M&M. The company signed an agreement with Volkswagen. Prakash Diwan will join in to discuss more about that agreement and what it means for the stock. Stay with us.